Good morning, Richard Calhoun, Creekside Realty, 40 years of real estate in Silicon Valley. We're here to talk about the real estate market and the impact in the last week. Here are some key URLs. They're the same. You'll see them a couple times during the presentation. Here's the first slide. This is a different presentation than I've done in the past, but I think it will be pretty succinct and pretty good for everybody. This is the overbid magnitude. So this is how much buyers are overbidding over the seller's asking price. And you'll notice that most of the areas are red, or at least a shade of red. That means sellers are getting more than 100%. The one exception's right here in Menlo Park and Atherton, where it's blue, indicating that they're getting less than the asking price. So this shows you single family homes in the different micro markets as shown on the map. Not 100% accurate because the zip codes don't always line up with the real estate areas, but pretty darn close. Now we're looking at the frequency of overbidding. This is how often buyers are overpaying, whether it be $1, 1%, 10%, 20%. So again, the deeper the red, the more the overbidding. You can see the only place where they're not overbidding a lot is right again in the Menlo Park, Atherton area. Where there's no color, that means 42% of the sellers are getting more than their asking price. If the color is completely saturated in red, it's at 75%. So that would be Milpitas, North Valley, Blossom Valley, and Santa Teresa. If it's saturated blue, it's at 20%. So between 20% and 42%, it's a shade of blue. So you can see that the Atherton area is at 33.8. From 42.5 to 75, it's going to be a shade of red. The deeper the red, the more the overbidding. So you can see how common the overbidding is. And then this is, to me, the more important indicator. And the reason this is more important is it's current. To get to the sale price list price ratio, you have to have closed escrows, which means escrows have to close, which are about 30 days on typical. Some are much longer, some are fewer, shorter than that. The thing that's nice about days of unsold inventory is it's looking at the current inventory based on compared to the current rate of sales. Now, to get a current rate of sales, you have to go back and get some stability. So that's still 5 weeks, but at least you don't have that 5 weeks on top of the close of escrow. So the concept's the same. The deeper the red, the faster the marketplace. The faster the marketplace, the quicker it's going to sell, the more likely they're overbidding. So you can see the fastest area right now is Redwood Shores. Now, keep in mind that's a very small geographical area, so there's a lot of fluctuation in that particular marketplace. But if you look at Menlo Park, Atherton, the bluer color, that's basically at 82 days. So you're getting up there in the time frame. And then on this chart, between 50 and 70 days of unsold inventory, there's no color. From 70 days to 121 days is blue in color. From 50 days to 24.5 days is red in color. Now what we're looking at is each one of the micro market areas, the days of unsold inventory. What you're looking at here, in my opinion, is to come over on the right-hand side and see if the areas are mostly flat or if they're mostly going up. And you can see that a fair number of them down here are flat and some up here are going up. And I did look into this, and it did look like mostly it was condos and townhouses were going up. So that's a slowing down of the marketplace. This now is slides that used to have red lines on them, and I deleted the red lines. The red lines were a percentage because I think that was confusing the graph. So basically now it's a simple graph. You have the blue data for the current data. You have the gold data line down here, and that's the 5-year median. The 5 years I use are 15, 16, 17, 18, and 19, which were all 5 good years. So if the market was on top of this gold line, we'd be having a great year. Because this is days of unsold inventory, as days of unsold inventory go up, that's a declining marketplace. Basically, where you had the declining marketplace was right after shelter in place, which it got shifted 1 week to the right, unfortunately, but it should be right here at week number 10. So you can see there was an immediate impact where the days of unsold inventory went up, the market slowed down, but you can see fairly quickly by week 23, we were back to a normal marketplace, and then we've been under a normal marketplace. And just right now, it looks like we may be ready to cross over and go slightly slower. But again, that's slow compared to 5 good years. So this says we're in a very strong marketplace. Now we're doing the same concept, and we're looking at the percentages of what I consider to be the 3 key components. So we'll just go down in order. The new listings up here, that's how many new listings came on the marketplace in the last week. So if it was a completely normal year, it would be right down here on the 100% line. So you can see we had something like 175% of the normal number of new listings. So we had 75% more new listings than we would expect it to have. The next component down is the number of new offers. So the number of new offers has sort of been keeping up with the new inventory up to here at least. And then here they've been doing a pretty good job of keeping up. I'm not so sure it's going to be able to keep up here. And I think what's basically happening is holidays normally negatively impact real estate with shelter in place. We're really not having the sellers take their homes off the marketplace, which is why we're having all these new listings coming on the marketplace. And the buyers are not used to that. So they're not out there historically looking around. So you can see the number of new listings, number of new offers now is down somewhere around 138%. So if your new listings coming on the marketplace is a greater percentage above the number of new offers coming on the marketplace or being accepted, then your inventory is going to go up. And that's what the blue line is. So you can see back here at week like 39 was the last time we had normal inventory. And then in week 40, we went up, 41, we went up, 42, 3 was a little level, even 4, but 44, 45, 46, and now 47 are getting up there. So right now we have 135% of the inventory we normally have. So for anybody that's out there and saying that the market is being limited by inventory, we actually have 35% more inventory than we do now than we have had for the past 5 years. Moving on to the total active listings. So again, the same concept. The blue line is the real data for this year. The gold line is the 5-year median. You can see there was a perturbation back here for shelter in place. There was another one back here for Super Bowl. Super Bowl takes people away. Real estate's an optional event. With the 49ers in the Super Bowl, that made a big difference. You can see there's normally a slowdown here for Memorial Day that really didn't happen. People were blowing through it. There's one here for July the 4th that really didn't happen. There's one for Labor Day that really didn't happen. So you can see the holidays really haven't been impacting. So here we are coming down to the end of the year. And yes, there is some impact, but the impact is much less than normal, which is what we've been experiencing all year long. Lack of a holiday is impacting the sellers more. The sellers were more impacted by the holidays traditionally than buyers. And so now the buyers' volume is falling off more than the seller's volume is. And that may slow the market down. I think it's going to be short-lived. Here's the number of new listings in a given week. And you can see there's been a little bit more fluctuation going on, but the concept is the same. The blue line is the data. So you can see starting here in week 37, we started getting more new listings than you would expect. Initially, some of this was the demand that was back here that wasn't picked up. But if you start picking up the times when the blue line was above the gold line here and all through here, it may start equaling out all these transactions here. So remember back here, I calculated we lost $4 billion worth of real estate. I think we've recovered a fair amount of that by now. Now you're looking at the number of new offers accepted. Here, your blue line is above the gold line, which says you're having more offers, which is a great thing. More income to the real estate industry, more transactions, more buyers and sellers moving. A lot of this, in my opinion, is people moving to get their house to meet their needs more with shelter in place. Now we're going back to overbidding. So this is more historical data. This is the frequency of overbidding. So you can see that there's been definitely a plateau and a little bit of a downturn, but again, fairly flat. So when you start reading this, you were way up here before shelter in place. And when I say way up here, it's somewhere around 70%. As shelter in place happened, it came down. The reason this is a gradual turn down is some escrows are quick and some are slow. So the impact, the shock of shelter in place gets spread out over time. So here you hit your low point in week 17. Then there was basically a general climb back all the way up here to about week 44. Then 45, 46, and 47 have been at a new lower level. Still, I would say it's fairly flat. Anytime you have 60% of your sellers getting more than their asking price, you can't be complaining. Here's looking at each one of the different micro market areas. The red line back here is the biggest micro market, which is all of Santa Clara County single family homes. You can compare that to the others. So this is sort of the bellwether trend. And basically you look at this and you say, hey, there's basically a gradual slow increase as time goes on, which is always a good thing to see. Now we're changed from frequency of overbidding to magnitude of overbidding. This is how much are sellers overbidding. And again, basically the pattern is the same. The numbers are a little different. You got down to just about 100% of the asking price. Sellers were getting what they were asking. They weren't getting more, they weren't getting less. Then you got up to about 103%. You dip down and you're just shy of 103% right now. But basically you came up and then you've been flat with some statistical fluctuation. Here's the overbidding in each one of the different micro market areas. And again, you can see the trend is generally up. There's a few exceptions like this one area here that's going plummeting downwards. This now is looking at the macro data, which is Santa Clara County, San Mateo County, single family homes, condos, and townhouses. And what we're looking at is each week's distribution of sale price to list price. So the red line is getting hard to see, but that's the current data. And if you look at that, I would say that's sort of in the top third of the weeks. The weeks that are above are the dashed lines, which are back here basically in October. So October 9th through October 30th, we're sort of hotter lines than we are now. So the market, and if you go back to the dotted lines, that's more like September data. So September data was cooler. The market was heating up in October, and then November, it actually cooled down a little bit from October, but it's still above September's level. And again, remember, these are delayed by about 5 weeks. So you're actually further back. Here's the same concept with more weeks. Plus, I put in the outlining. So this is the best April ever, but the furthest down line is the worst this month ever, which was December of 2001. The second up blue line is the worst November ever. The red line is really hard to see, but you can sort of see it coming down through here and then down through here, and you can pick a little bit of it up over here on the right side. So basically what that's saying is, again, the dotted lines are the oldest. So the market improved, then the dashed lines, and then the solid lines are on top of the current line. It's probably in the top, when you've got the more weeks of 20 weeks, it's probably in the top 20%. But again, the market was worse in the summertime, it improved in the fall, and now it's doing a little bit of a step back, but that's because of the season. Now we're looking at the data for November. So we're still looking at macro data. I went back and looked at November data, which is normally November 1st for 35 days, which that's true for every line except for 2020. 2020 is just the most recent week. So you can see that the most recent week's performance is pretty good. There's, basically 1, 2, 3, 4, 5 lines that were better when you're looking at the macro data. Here, if you look at it, going back all the way to 1997, there's still only about 5 lines that were better than the current year, the current week. So we're doing fairly phenomenally well. Now what becomes real interesting is when you compare only Santa Clara County single family homes, it pulls way away. So we're now having the second best November that we've ever had. Now, again, this is only 1 week of data for the current year, but when you compare this 1 week of data for November, it's better than any year except for 2017. 2020 right now is the second best November we've ever had based on 1 week's of data. Here's the same graph, just going back to 1997. You can see that we're outperforming all the other previous years. And just for completeness, I don't think there's much here, but this is sold prices. This is where you can get the cheaper homes. The bluer the area, like in East San Jose, Central San Jose, that's where the price is the lowest, followed by Morgan Hill, probably followed by San Mateo County North. And then the red ones are the most expensive. With that, I'll ask any questions.
Hi, Richard.
Hi, Lily.
Hi. The previous page, 24, page 24. I think are you saying the 1 week, but then it on the title it says five weeks.
All the Novembers are 5 week data, November 1st through December 1st, except for 2020, because we're not to December 1st yet. So the current month, I only do 1 week data. So I'm comparing this 1 week of data to 5 weeks of data.
Oh, okay.
And
now I got it.
I think that's valid because I don't see any reason why there would be a distribution difference of, what week you're in the month. But what I may do in the future is I may go from the 1st of November to whatever day we are in November, like this for this week going forward, I may go from November 1st. So basically, I'm toying with the idea of this red line go in the future being November 1st through the present date. So it would be through last night at midnight, but right now it's only 1 week data. So that's why I was saying 1 week data. All the
Oh,
lines that's comparing to are the 5-year data. The big difference here is this is single family home in Santa Clara County only, because the reason I thought of doing this is what I've been maintaining is that San Mateo County is getting hit harder than Santa Clara County, and that the single condo townhouses are getting hit harder than single family. So now I'm bringing out just looking at how the performance of single family homes in Santa Clara County is doing, and it's the second best year we've ever had.
yes. Yeah, I can see that. Okay. Thank you.
You're welcome. Here's the URLs again, and now we'll go into a little bit more detail on the frequency of overbidding that we've hit on already. I'm not doing the 5 weeks back like I did in the past. This is just this data of 11/28. You can look at the different numbers, so you can look and see what the different percentages is for each area. We range from a low of 33.8% of the sellers getting more than their asking price in Menlo Park and Atherton, to a high of in Foster City of almost 81% of the sellers getting more than their asking price. Okay, now days on sold inventory. Now you don't have to wait for closings because you're just looking at the number of offers accepted compared to the inventory on the marketplace. So now what we're doing is we're going back basically 28 days. It's 5 Saturdays. This is October the 31st. And so now you can see the change of the color as we go forward. So you can see there was some fairly significant change. I'll go do that a second time. And I'm trying to also work on it so the map doesn't move around as much, but that's every time I do it, it seems different. So here's the 31st of October. Here's November 7th. Here's November 14th. Here is November 21st. And here's November 28th. So this is where you are today. You just try to give people a little idea. Here now is the raw data. You can come back and actually get specifics for any area. This is your single family micro market areas in Santa Clara County. This is San Mateo County. And then this is San Mateo County and Santa Clara County condos. And then here is October of the past years, because we're not to December 5th yet, so I can't have November data yet. So if you just look at this, you can see that at 103%, we're pretty much outperforming every year except for 2017. And with that, I think we go into 11 different metrics. Each metric has 5 slides. I'm only going to be showing 1 slide for each metric. So what this is doing is just showing days of unsold inventory. This is one of the few numbers where the larger the number of days of unsold inventory, the slower the marketplace, because basically it tells you if you took 50 days to sell the marketplace, that's slower than if it took 30. So the higher the number, the slower the marketplace. So basically everybody's going down except for condos and townhouses in Santa Clara County. Now, yes, you can say each one of these areas ticked up this week, but that's just the fluctuation. You know, remember we had the holiday, a lot of people are still not back at work. So, but the big takeaway that I've said for the last several weeks is before shelter in place, the condo market was the hottest market of the 3, and now it's the slowest. San Mateo County was the slowest. Now it's the second slowest. Santa Clara County single family homes was the second fastest, and now it's the fastest. They're basically back at the same level except for the condos, which jumped up quite a bit. But basically, you can see the trend has come down and stayed down. So I think what's really pulling up the overall numbers slightly are the condos and townhouses in San Mateo County that aren't reflected in this map. Here is the frequency of overbidding. What's really noteworthy is the rapid drop-off. Now, granted, it's only a couple weeks, but there's been a significant drop-off here in San Mateo County. And you can see it probably peaked here back around the 10th of November or something like that, was coming down gradually, and now it's coming down. Now, keep in mind, it's a little hard and I get confused a little bit, but see the little tick line right where my laser pointer is? That's where the 14th is. So this graph does go all the way up to November the 30th, even though it's not labeled. It's just a matter of where you pick the data points. I wanted to keep shelter in place labeled the best I could, and I'm using Saturdays. So that's why it looks like, you know, the 14th is the last data point. No, it goes all the way up to the 30th of November. So this is as of the late on the 27th midnight. I gather the data on the 28th, so this is actually my November 28th data point. Moving on to the magnitude of overbidding, you see the same exact trend where San Mateo County has been coming down. Santa Clara County is still going up. Condos and townhouses are either flat or slightly going up. I would probably say condos have been flat basically since the end of June, with some fluctuations, but fairly flat. San Mateo County and Santa Clara were both going up through about November the 1st. Starting on November 1st, San Mateo County started to go down and Santa Clara County continued to go up. So you can see there is differences within this fairly small geographical area, which is why I have so many different micro market areas that people think it's overkill at times. This is looking at median days on the marketplace. The data through here is not representative of the marketplace. This happened because the MLS stopped counting days on the marketplace during shelter in place. So they stopped basically here on the 16th, which is the purple line. So immediately thereafter, the days started falling down. Then they started counting. The days finally, went up pretty rapidly. They reached their equilibrium, and they've been at the equilibrium. So Santa Clara County is at 9 days. San Mateo County is at 11 days. Condos and townhouses are at 14 days. So if half the sellers are selling their properties in that period of time, you really can't be complaining about the marketplace. Here's the current available inventory. Here I'm showing it with all the micro market data because the size of them pulls it out so you can see the three bell ringers real easily, which are Santa Clara County, San Mateo County, single family homes, and condos and townhouses in Santa Clara County. And the concept is basically the same. Prior to shelter in place, condos and San Mateo County single family homes were the same. Now condos in Santa Clara County have a lot more than the San Mateo County single family homes. Santa Clara County went up and came back down. Everybody was a little bit delayed in their performance. There was a hit back here with shelter in place. The peak of the marketplace is normally right around July 19th. And you could almost argue that Santa Clara County had their peak there, but they had this long plateau, which is unusual. The condos and townhouses continued to grow. This is a bad data point. And then San Mateo County single family homes, you can see this drop off is a little more severe than you normally have, but the drop off that started here would normally have started back around July 19th when it was still clearing, and that was all because of shelter in place. Here are the number of offers in the past 5 weeks. You can see the trend is definitely down in single family homes in Santa Clara County, down in San Mateo County single family homes, and down in condos and townhouses in Santa Clara County. And basically, if you start looking, it's been basically down in all these areas. Now, some of them are hard to tell, like this blue line right here. You might say that was flat, but look, it's down from up here. So it came down a little bit earlier. Here is the number of closed transactions, basically the same as the previous slide, just delayed. Now, this big drop off here, remember that a lot of title companies were closed Thursday and Friday, so there was only 3 days to record the transactions. So this is more of a statistical fluctuation. Here is the 10 percentile pricing, and basically I'm still not seeing any trends other than prices are basically fairly flat. Here is the different micro market areas in case people wanted to look at them. Basically, if you look at them, every area is flat. This green area is coming down a little bit here, but it was down over here. So you basically had some overshoot. You can see that some areas have quite a bit of movement from week to week, depending on what's happening. And that's why you have to balance micro market data to some degree with macro. Is this just a statistical fluctuation like you saw this U-shaped valley here, or was it a market trend? And I would say this was just, a bunch of slightly lower priced homes sold, which brought the low end price down for the 35-day period, the 5-week period that I tracked that particular set of data. And you can see how there's this almost square wave here. And if you look at it, they're probably in groups of about 35 days, 5 weeks. Now you're looking at the median price. This is what most people follow. Again, Santa Clara County, pretty flat. You can see it was up a little bit higher. We're now down a little, I think it was 13.1390 now, just under 1.4 million. Where here we were up to about 1,450. So we've lost about 60,000. Is that really a loss in market value? Probably not. It's a shift, in my opinion, of what's selling in a given week in the marketplace. San Mateo County has a little bit more fluctuation because their price is a little bit higher, but basically it's flat. There's fewer homes for sale. So It moved a little bit more here, but that's just, I think, the fluctuation of the smaller data set. Here's the micro markets that you can see. And again, the trend is to come out here to look at the recent. Is there really any one area that's going up? No, I would say these all are fairly flat. Because these are all flat and get the county data shifting, that's the strong indication that you're having a market mix change impacting the median price. Here is your 90% price. In San Mateo County, if anything, I would say the trend is upwards recently. In San Mateo and Santa Clara County, it's basically flat with some fluctuations. There's more fluctuations on the 90 percentile because you're looking at the high end, and with only 10 percentile, although it's the top 10 percentile, which is why it's called 90, you only have 10% of your data points in there, which gives you more instability. And then here is each one of the micro market areas. And again, when you look at this, basically they're all flat. And if the sale price at 10 percentile, median price, and 90 percentile for the micro markets is flat, and yet the county data is changing, that's a very strong indication that it's a shift of the marketplace and not market values changing. Here's the duration of escrows. You can see we slowed down from 25, 27, and 28 days to close an escrow, where all three of them are now at 30 days. And with that, I'm open for questions. I will see you next week, and thanks for joining me. Bye for now.